Tata Chemicals corrects over 5% after cutting soda ash prices by 3 to 4% across the country.
Just Dial surges after reporting a good set of numbers, and the management remains optimistic of a sequential improvement in margins. Quick Heal slumps nearly 7% after reporting a very weak set of numbers.
Jubilant Food gains over 2% after Coca-Cola India acquires 15% stake in an associate company, #Loyalty, for 105 crores. Following this, Jubilant stake in #Loyalty reduces to 29.75% from 35%.
And BEML rallies in trade on news that equity shares of BEML land assets will be listed. From April 19th, this will clear the path for government's partial divestment in the company. Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me today on the show is Ekta Batra. Well, Ekta, it's that sort of a day, right? The markets appear to be in a bit of a range. We started off in the green, but as we speak, we're down close to around 35 points. I guess par for the course when you have the mid-cap index trading well in the green.
Hi, Nigel. Yes, absolutely. You know, as of now, we have the mid-cap index, which is up around 0.5%. And last week as well, there was this relative outperformance for the broader markets as compared to the Nifty and the Sensex. We're not complaining as of now because the Nifty is just about lower by around 36 odd points and the Sensex has lost around 130 odd points. So nothing to write home about, nothing to be too worried about. But it is a good time then to talk about the technicals of the market. We have Shilpa Raut, who's joining in for a technical check and what she's strategizing today. Shilpa, hi, welcome to the show. It's a Tuesday, second trading day of the week. The markets are just about consolidating, you'd have to say. What would your call be?
Good morning, Ekta and Nigel, and thank you for having me on the show. If we talk about indices, Nifty, as of yesterday's data, we saw the FIs long and short has reduced from a previous days of 39% versus 61% to 37% versus 63%. So they have started unwinding the longs, and as expected, we are good to see a brief consolidation or a profit booking scenario on Nifty for targets to 17,400 on the downside. Likewise, Bank Nifty, of course, is better placed and looks like it could outperform Nifty now in coming sessions because we see 42,200, 42,300 and 400. They're very active put additions, so which means that the support base on the near term is very well placed at around 42,200 zones. So, and it could be a scenario where we see Bank Nifty rallying towards 43,000 first, and then Nifty probably being into the consolidation zone and then coming out for targets of 18,000.
All right. What about individual stocks?
I have two buys. One would be in Coal India trading in futures at around 231 zones. One should buy with a stop loss of 228 for targets of 235 to 237. The another one would be the buy in DLF. DLF also has given a brief breakout now above 420 zones. So with a stop loss of 418, one should look for targets of 428 to 432.
Okay, all right, Shilpa, we're going to leave it on that note. Thanks very much for joining in and giving us your technical calls. Let's shift focus now to our special segment where we will get you a few ideas for profit from Money Control Pro. We have Madhuchanda Dey of moneycontrol.com joining in now to talk about a stock that she's tracking this morning. Madhuchanda, over to you.
The US banking crisis and the resultant dent to sentiment was expected to impact IT services players with large exposure to banking, financial services, and insurance, and it did impact TCS meaningfully in the quarter gone by. TCS reported sequential revenue growth of 1.7% in reported currency and 0.6% in constant currency, the weakest constant currency growth in recent times. The rather unexpected slowdown in revenue also impacted margin, and the operating margin of the company was at the same level as the previous quarter, despite currency tailwinds. However, the momentum in deal win was surprisingly strong. With a large number of smaller deals in the order book, the company is hopeful of a faster conversion of orders to revenue. Supply-side pressures are also gradually waning. While challenges persist in the near term and the macro scenario might turn murky, the structural demand drivers of technology spending are intact, and should there be relative calm on the macro front, the demand revival can be swift and fast. A result-induced correction can therefore provide long-term accumulation opportunity.
All right, thanks very much for bringing us that update. Well, for the markets, we have the Bank Nifty, which is doing well. Remember that the Nifty Bank has been gaining for the past 3 to 4 trading sessions and is continuing into today's trading session. So the Bank Nifty currently up around 157 odd points. Time for a short break. Up next, we'll be talking to the management of Gensol Engineering to discuss the company's business outlook at large and much more. Stay tuned. Welcome back. Well, it is quiet for the market, so let's talk about a couple of stocks which have been clear outperformers. One of the stocks that I am talking about is Gensol Engineering. If you just look at the 52-week low for this particular company, it stood at around 300 odd rupees, and currently the market price stands at around 1160 odd rupees. So it's been a huge outperformer from, say, a year ago in terms of levels. And if you compare it to its 52-week high, which was at around 1990, there's still some way to go to get back to those levels. So huge outperformer. What's going on with the company and what does business look like? We have Anmol Singh Jaggi, who's the chairman and the managing director of Gensol Engineering, joining in to discuss the company's business outlook. Mr. Jaggi, hi, welcome to the show. Well, I was just looking at your latest update. For the fiscal FY23, you've indicated that you've seen an income rise of around 144% to 391.6 crores, largely led by your renewable energy segment as well as, India's commitment to climate change. Just tell us, out of this 391 odd crores, how much is basically coming in from renewable energy, and are you anticipating the similar kind of growth rate going into the next fiscal?
Hi, good morning. Thank you for having us. And I would want to say that, of course, the last year we were 100% just focused on renewable energy. But going forward, our company is also diversified into electric vehicle manufacturing. So in FY24, you would see revenue coming in from electric vehicle manufacturing too. But for FY23, this 391 crores, which is the unaudited number, is 100% of coming from renewable energy. And when we come to the outlook for the future, I think we've already indicated to the stock exchange that today the company is sitting with more than 1,000 crores of order book, and there is a huge amount of deal win pipeline that we are sitting on. So we expect that if God is kind and everything in the world seems good, we should be clocking much higher revenues than what we did in FY23.
Right. All right. Hi, Anmol. Good morning. Thanks so much for joining in. Anmol, clearly FY24 is going to be the make or break here, right? Because the street is anticipating a big growth from year on 24, and then they're looking up even for 25. You had made some projections in 2022 itself. Now for FY23, I think you've fallen a little bit short of those projections because that EV vertical didn't really pick up for the past year. But bulk of that is going to come in FY24, as you said. So for FY24, what kind of number are you looking at in terms of revenues? You have also announced an acquisition, a month and a half or so ago, that Scorpius trackers for around 135 crores. So including that, what is the revenue contribution and how much of it comes in from this inorganic growth?
Sure. So what we expect is that given that we are entering the year with about 1,000 crores of order book, we expect, and the deal wins that we are expecting very soon, the solar EPC business, which is the renewables business, should clock more than 2,000 crores of revenue, including the acquisition that we have just made. The acquisition is under the consummation process, and we expect that by 15th May, it will get consummated. And with that, all the revenues that Scorpius also does will get added to the revenues of Gensol Engineering. My expectation is that Scorpius trackers will add in the complete mix of 2,000 crores, about 300 to 400 crores of revenue will come in from this acquisition. Also, from a Scorpius perspective, it is a much better margin product. Gensol Engineering renewables business runs at about 6% PAT margins. Scorpius business runs at about 15% PAT margins. So hence you would expect that that actually the Scorpius deal will help us improve the margins going forward. So it's not just going to help us with top line, but also going to be very important for our bottom line, as Scorpius Trackers is an extremely complex technology company, and we are very thankful to the Scorpius team for joining hands with us, and we believe that this is going to be the future for how renewable projects will get set up using tracker technology.
2,000 crores from this business, but what about for the entire company? You're factoring in something from EV, right? EV manufacturing and EV leasing. How much is that?
Sorry, you mentioned about the EV.
Yes. How much, 2,000 crores is from your core business, including the inorganic growth. What about for the remainder part of the business, which the street is very excited about? That's the EV manufacturing as well as the EV leasing. How much could we factor in from there? I'm trying to get a sense of the consolidated entity. What could revenues look like?
Sure. So on the EPC side, like we mentioned, including Scorpius, we should do about close to 2,000 crores. On the EV side, what we expect is that our plant is going to start production from July, and it'll start. Our production capacity is for 30,000 cars a year. We are going to start small in the first month and then gradually ramp up. We expect that we will hit the full production by September. Which means that for this year, the EV business should roughly contribute. We should sell about 10 to 12,000 cars, which will mean that about 500 to 700 crores of revenue will flow in from the EV manufacturing division, which means that on a consolidated basis, we should, on the EPC business, doing about 2,000 crores, which includes Scorpius, and the EV manufacturing adding about 500 to 700 crores. So all in all, it should be close to 2,700 crores of top line that we are talking of for FY24.
Okay. This 500 crores in terms of cumulative order wins that you had announced in the month of Feb, has execution begun? Where do things stand?
Yes, ma'am. I think India is on the very fast pace to use renewable energy and to grow the complete power sector. So we are seeing that there is extreme pace at all ends. I think all government agencies, all private agencies, all suppliers, all manufacturers are all kind of primed up for this kind of growth and for this kind of fast execution. We expect today that order win that we do basically gets completed in less than 9 months of the order being picked up from the customer. So execution is starting. I can tell you that the moment we sign orders, the very next day our team is fully active and is wanting to finish those orders and those projects.
Okay, so that's actually my point. Execution within 9 months of receiving the orders. So I guess execution is on for those orders worth around 500 odd crores. Just a quick question. How much cash do you have on books? How much are you generating at this point? Would you look to deploy it in terms of inorganic growth, considering that the pace that you're growing at, for the inorganic growth rather?
Sure. So we don't expect to do any inorganic growth more in FY24. We have done one, which is Scorpius Trackers, which we believe will do a very big value addition to our technology strength. But beyond that, we are not looking at anything. From a cash perspective, I think last what I remember, we had about 190 crores of cash balance with us, and we are a cash generating business. We are a profitable business, so we generate cash every day of our lives.
Okay. All right. Very quickly, Anmol, before we let you go, just want to confirm, you're sure, right? Middle of this year, manufacturing starts, because that date has been postponed a little bit. So you're sure on that, and all approvals have been received as well.
Yes. So we expect that July should be the timeline.
All right. Very quickly, you're going to be looking up in terms of revenues, profitability as well. You have put out a projection of 175 crores odd. Any dividend policy you'd like to announce? Because I'm looking at, I don't think you've announced any kind of dividend. So a dividend policy will be something that you'll be considering in the time ahead?
Sorry, I couldn't get the question.
Dividend.
No, I don't think we are talking about any dividends as of now. We would put rather all the cash in the business and try to grow the business. Of course, dividends are extremely important for a shareholder return perspective. But what I believe is that we are more concerned and that we should retain the cash in the business and try to. There's so much to expand and there's so much to do that we would be reinvesting all the money in the business itself.
Okay, all right. We're going to leave it on that note, Mr. Jaggi. Thank you very much for joining in and speaking with us. So that's Gensol Engineering. Fired away in the past 1 year in terms of his stock performance. As of now, however, we need to take a short break. We'll get you more on the markets and the Apple Store opening once we're back. Stay tuned.
Welcome back. Well, the buy on dip strategy continues. The Nifty is now down only around 10 points. When we started off the show, well, we were down closer to around 40 points or thereabouts. What's doing well? The Nifty Bank. And as we explained earlier today, that's the index that's in form, and that has to hold one end up because the other big boy, the one that's on the non-strikers end, is the IT index. And that's not doing very, very well. So the Nifty Bank continues to march ahead. The 41,700 is the crucial mark that it needs to hold on to. It held on to that yesterday. And now, in fact, we are trending higher. Indices Bank, one of the top gainers, up closer on 1.8% odd. So that's flying away in trade. Nestle India as well is looking very, very good. That stock is up closer around 1% odd. More than 20,000 rupees is the stock price out there. And SBI as well has seen a pop-up in the last few minutes. So good to see that we're having a bit of a recovery. The buy on dip strategy is working yet again. Resistance comes in, though, at higher levels at around 17,800 odd. Well, we'll have to wrap up on this show. But remember, Apple is all set to launch its first India store in Mumbai. In just a few minutes from now, we'll get you the live coverage after this short break. You stay with us.